on the public. So tell me, I was asking, ladies and gentlemen, what makes a strategy? Let's have this conversation. Think about anything. What makes a strategy? Tell me, what makes a strategy? What makes a strategy? When you trade Forex, you literally trade Forex with a strategy. Now, what makes that strategy? A consistent set of rules to follow. Nice. So, entry plan, exit plan, risk management plan, fantastic. Okay. Set of discipline that works perfectly on every financial instrument and different time frame. Awesome. Still waiting for more feedbacks. Let's learn together. What makes a strategy? What makes a strategy? Or maybe let's reverse the question. What doesn't make a strategy? So if you cannot answer the question directly on the point of what makes a strategy, then let's talk about what does not make a strategy. Well, let's not waste so much time. Ladies and gentlemen, you make a strategy. You're the one who makes the strategy. Hey, PC5, today is your first day. Congratulations. Good to have you on the ARC training and trading session. Training and review session, rather. Good to have you on the call. Right? You make a strategy. And when I say you now, I mean, whatever you're doing in the foreign exchange market, it's a battle between you and you. It's not a battle between you and the market. You see, reason why Forex is different from all other, reason why trading Forex is different from all other avenues to earn money, it's because it's not capped. When I say it's not capped, I'm saying that there are no restrictions as to what you can make in the market. Talk about any business today, I'll tell you, your income will be capped on any particular business. As far as Forex trading is concerned, your income is not capped. So it's literally you versus you, because it's more like you're going into a space where there's so much in abundance. There's so much funds to make. You literally seen it. You know that this point in time, you are in control. Other various means of earning, you're not totally in full control of how you earn the income. But in the Forex market space, you are in control. You don't need anybody's approval. You don't need anybody's validation before you earn money. So it simply means that it is you versus you, because right now, the only person that will be standing between, the only person that would be against you earning money, or the only person that would be for you making money or earning money is you. It's you. And see, innovations are happening. We're going into the year 2025. I can't even say, I'm pretty excited about, in fact, I'm pretty excited about what is going to happen in the year 2024. Right? But innovations are coming in, technologies, AIs, and all that. Should I tell you what people are doing? Do you want to know what people are doing? They would continue to create avenue, putting these opportunities in your face, just so that you can like or you can appreciate what it is you see. I'm quickly going to explain it in a moment. 2 years ago, there was nothing like funded account, or let's just say there was something like funded account, but it wasn't as popular as it is today. Do you know 2 years ago, people were more disciplined at trading compared to the way they are trading right now? So guess what? The advent of funded accounts the advent of funded accounts has literally increased the numbers of indisciplined traders. It's the truth. It has increased. When I started learning how to trade Forex 4 years ago, there was nothing like binary options. There was nothing like HFX. Maybe it was there, but it was not, nobody knew about it. Or maybe I'd say from this part of the world, people really didn't know about HFX. When HFX came into the picture, do you know what people did? For even people who have not traded Forex before, they lose so much. I'd say that HFX was the start of complete indiscipline, complete recklessness in the foreign exchange market space. Binary options trading, what about that? And should I tell you another thing? Most of the people that didn't know anything about Forex before the advent of binary options, they came into Forex at the time of binary options, money in minutes. And guess what? They lose money. Majority of them are no longer trading today because the only thing that comes to their head is Forex is gambling. Because I tell you the truth. I'm an educator, but I'll tell you the truth. I'm so sorry about that. I hope everyone can hear me. I don't know. Um, I'm on 5G. I don't expect 5G to. I don't expect 5G to act up again. 5:20. But can everyone hear me? Sorry about that. Okay, good, fantastic. So back to what I was saying. The people who joined binary options that had no idea of traditional Forex, after losing so much money in binary options because of the nature of it, they are no longer trading today. Yes, I remember. So I was saying that a large amount of the funds I've earned in the foreign exchange market space, I made them through binary options, right? But guess what? Despite despite the fact that I was able to earn so much from binary, I got so frustrated with it. You know why? Because it got to a point where even the brokers we were using to trade did not actually want us to be able to withdraw our profits. Like, it didn't make any sense to me if I had to trade for a whole month, make profit, and then when it's time for me to withdraw my money, I'd start praying, I'd start going on fast, just so that the broker can release my funds to me. It didn't make any sense to me. I'm not really here to talk about binary options. Right now, people have lost money in binary options. The number of people who were trading Forex reduced. Do you know what they used to captivate people? Funded accounts. Now, ladies and gentlemen, what do you think funded accounts? Let's have this conversation again. What has funded accounts done to you as an individual? What has it done to you as an individual? As a trader, what has funded accounts done to you? What's your perspective about funded accounts? Yeah, you could perceive it as a big opportunity. You could also perceive it as a challenge. But let's just talk about it. What has funded accounts done to you? Has it increased your belief in being able to make money or trade Forex or stay profitable at trading? Or just let me know before I share what it has done. What has funded accounts done for you? In a way, for me, it has given me the whole picture. Makes you to be very careful in taking proper risk management. Ma'am, thank you so much for that. For that feedback. It makes you to be very careful in taking proper risk management. Man, that's you. This is for you. This is the way you perceive it. And you're able to perceive it this way. I'd say because you've been trading for years. You've been trading even before the advent of binary options. But do you know till date, people who started learning how to trade or people who started trading during the introduction of binary options, they see funded accounts as a means to even trade more recklessly without having to lose without having to lose so much without having to lose a big part of their hard-earned money. Leverage earning through discipline and proper risk management. Fantastic. That's the point. It can also make one greedy. Because take a look at, if you're thinking about it this way, you're putting $100 of my money. I'm using $100 to get myself a $3,000 account, life account, in this case. What comes to my head? Well, I could actually see the first thing that comes to anyone's mind is, oh, I could actually use this money to make more money. But do you actually realize that the money you have on that $3,000 is a 6% drawdown they give you in a day? That's your money. That's the only money you have leverage over, not the total 3,000 US dollars. It's just what's 6% of $3,000? 10% would be $300. 5% would be $150. 6% should be $180. $180 is what you have to trade with in a day. Somebody says, you know, someone who has lost more than 100 funds. Somebody got into my space, I think about 3 months back. Before he got into my space, he had already lost about 3,200 accounts in a space of 2 months. So if somebody has lost 100 funded accounts, I can imagine. And I can't imagine, but I can relate. Right now, back to what I was saying. You have $100, you're able to use $100 to purchase a $3,000 life account. And what comes to your mind is, oh, I have good money to leverage now. And no, that's the type. You don't have good money to leverage. Yes, the figure is there, 3,000 US dollars. But guess what? The moment you understand that you only have $180 to trade in a day, that is when you stay disciplined. Because $180 is 6% of that amount, of that capital. And 6% of that capital is the drawdown, the daily drawdown the broker is giving to you. So if you're trading with $180 in a day, what is the reasonable amount of money you're supposed to risk in the market per day if you have $180? If you have $180, what's the reasonable amount of money? I don't, you're not supposed to go more than 50% of that money in a day. You're not supposed to go more than 50% of $180. 50% of $180 will be $90. That's literally about 3%. You're not supposed to even, and I used to say this, you should either risk, the maximum you risk on the trade is 3%. And that's if you're a pro. If you're just starting up or you're intermediate, come on, why would you risk 3%? Why not do 2% or 1%? The reason why I'm saying this is because we're going into the month of December. Did I say we're going into the month of December? Sorry. We're in the month of December, and I want to tell you something. One of the dangerous times to trade is December. I'm saying it out of experience. I've gone through it 3 times. I've gone through trading in December period 3 different times. The reason is because the majority of the financial institutions that participate in Forex, this is the time where they'll start rounding off. This is the time when they'll start getting reports, acquiring data as regards what they've been doing from the month of January. So there's every probability that maybe things you've been doing over the past 3 months might not really be working. And if it's not working, it's not a problem of the strategy. No, it's a problem of the season. There are times and seasons. I don't want to go into that. Right? It's not a problem of the strategy. It's a problem of the season. And so what do you do in a season like this? You adapt. And you know what the majority of people do? Instead of adapting and then bringing their risk a little and being conservative with their risk, you know what they do? They remember that they have stuff to do during Christmas. They remember that they are supposed to go on vacation. Guess what? This is the season where they increase their risk. And at the end of the day, you see so many people losing money. In fact, I know people, I know about two guys last year. All what they made from the month of July to the month of November, they lost everything in the month of December. I'm preparing you ahead of this month. I've been on the chart for almost, I'd say for a bigger part of 5 hours, trying to backtest a particular strategy that I'm thinking of introducing. Why am I introducing it? Is because it reduces your risk, it increases your reward, and it's a scalping strategy. Right? Because I sure do know one thing. In the month of December, you don't get trends in the market. You don't see price just move uptrend. You don't see price just move downtrend in few hours. No. Does a whole lot of consolidation. And the reason is because the major players of the market, this is the time where some of them start pulling back from it to take data as regards what they've been doing from the start of the year up to this time. So I'm preparing you. While we anticipate the new innovations, while we anticipate the new technologies that will come to play in the year 2024, this is not the time you want to become reckless at trading. Because let me tell you this. When you lose money trading and you lose the money recklessly, you think you have a control over repeating that next time. But the truth there is, it establishes a blueprint in your mind, subconsciously. No, unconsciously, not subconsciously. You see that loss you had, that experience, it's established unconsciously. And that's why you see people lose money based on recklessness, and then they get scared of taking a trade. You see people lose money, and then Even if they have the money to open another account, when they open the other account, they become restless at trading. They take a trade. It's one thing to be scared of taking a trade. It's another thing to take a trade and then be restless. You could take a trade, if you go through that experience, you could take a trade and then you're scared. You're literally looking at the market when it's almost getting to your stop loss. It's more like the whole world is on you. When it's going towards take profit, and see, if you're going through that phase of restlessness or that restless phase, what happens is you won't be so patient to see a winning trade become a win. And you won't be so disciplined to go out of a losing trade. Am I making sense? Does anybody understand what I'm saying? It's what happens. It's not a question of whether you have the money or not. Oh, coach, you know what? I think I've lost the account. I'm going to fund another one. No, it's not about that. It's not about the money. If it has to be about the money, it makes it much more easier. It's not really about the money. It's about the experience. We say the feeling is the secret. So even if you have $1 million stored somewhere and you decide to take $1,000 and you blow $1,000 10 times through recklessness, through indiscipline, hello, by the time you'll be getting the $11,000 bill to fund another account, you'll be scared. And I say this, what makes you profitable at trading is not the way you respond to your wins. No. What makes you profitable at trading is the way you react to your losses. There's a reason why I use those words. Most times when we win, we don't react to wins. We respond to wins. Oh, I just won the trade. You feel so excited. You respond to the win. But when you lose a trade, you react. And you know what? It's supposed to be responding to the losses. You're supposed to respond to the losses. Oh, I lose the trade. Okay, let me see if there's going to be another opportunity for me to get into the market. Or let's see if there's a new opportunity to win. That's responding. But you lose the trade. No, why did I lose it? It was supposed to buy. And then because you say it was supposed to buy, you start seeing it buying. And you know what you're doing? You're like, oh, it's buying already. Let me jump into the market. And then you jump into the market, it still sells. You are reacting. So I'm just saying this to prepare every one of us. I'm rolling something out. It's going to what I'm planning to roll out is one that would establish trading every day. I don't know if anybody can see this. If you can see what I have there, 14% profit. How many trades? Wins. 8 wins, 10 lessons. Now the 8 wins. Okay, maybe you cannot see. I'll tell you what I'm planning. So, understanding that this is a season of scalping, because you have majority of the financial institutions they'll be inactive during this period, and all you want to do in the market is literally just scalp. Get into the market, pick whatever you want to pick and get out of it. That's one of the things that would pay this season now. I decided that this is something I've learned a long time ago. I just decided to break it down into the lowest time frames, 5 minutes time frame to be precise. Now, it would establish us taking a trade every single day at the start of any of the trading sessions. If I'm working on GBP and NZD, then it's going to be at the start of the London session. So by 7 a.m., look at the markets. Whatever the market does at the very beginning of the London session will determine whether we're going to buy that currency pair or we're going to sell the currency pair. And when we are buying, we're risking 10 pips stop loss. The profit is 30 pips. When we're selling, we're risking 10 pips stop loss. The profit is 30 pips. Why are we doing this? It's I used to say, when you're investing, it's a game of what? Quality over quantity. When you're investing in the market, when you want to participate in the market as an investor, it's you should do it from a place of quality over quantity, not from a place of quantity over quality. No, it should be quality over quantity. But guess what? If you're looking to just get seems like you don't want me to release this information. I don't know. Why would 5G be? Can everyone hear me? Can you all hear me? Okay, good. So, as I was saying, if you're going to deal with quantity, then you should understand that you're reducing your risk to make more. So, imagine trading a day and all you're doing is risk 1% to make 3%. It simply means that if you lose 3 times in a week and you win twice, you still made out, you still made profits out of that week. Because 3 trades times 1%, that's 3%. 2 trades times 3%, that's 6%. 6 minus 3, that's 3. You still made 3% win. You still made 3% profit at the end of the week. Put in sense if you understand what I'm saying. That's the idea. It's not my style of trading. I'm not the guy that goes into the market every now and then, right? But like I said, we are approaching a season where we need to adapt. And you know what? Because it's you versus you, despite the fact that I'm not the guy that trades every day, I could just look at it in the sense that, okay, overall, I just want to be sure that I am not risking more than 5% of my capital in a week. I am not risking more than 5% of my capital in a week. So even if that's my trading plan. So just a moment. With dollars. It's because it's becoming, I mean, like, did I just renew my subscription? Can everyone hear me now? I think so. It should stay now. I did this thing on Sunday. Yesterday was Sunday. Okay. So that's my trading plan. My plan is I should not lose more than 5% of my account in a week. So even if I want to change the process, That plan still remains. That discipline still remains. So I'm still going to look at it for this week. I'll look at it for this week. I'll see how it works. I intend looking at GBP. Ladies and gentlemen, I kid you not. It's amazing. I mean, like the data I got for the past since the 2nd of November. Okay, good. So this is it. I still have something like this. You can see I have mark, cross, mark, cross. Now let me give you the statistics. Won 8 trades, lost 10 trades. I won 8 trades, I lost 10 trades. Now listen, the 8 trades I won, I made 30 pips on each of them. And I reached 10 pips. The 10 trades I lost, I reached 10 pips. So I was risking 1% to make 3%. And then I won 8 of the trades. And then I lost 10 of the trades. Now, it's normal mathematics. By losing 10 of the trades, it means that's 10 times 1. That's 10%. It means I lost 10% of my capital. But by winning 8 of the trades, 8 times 30 is 240. So I made 24%. Now, if you subtract 10% from 24%, what is left? Ladies and gentlemen, what is left? When you subtract 10% from 24, from 200 and from 24, what's left? When you subtract 10% from 24%, that's what? 14%. You think that's amazing? And it establishes your activeness. This is another reason why I'm so happy about it. Another mistake people make during this period of the year is when they try a trade and it doesn't go through, you know what? Like, you know what? Let me just leave this thing. Let me focus on something else. And the trap is this. Do I have anybody on this call who has abandoned trading for a period of 1 month before? If you've abandoned trading, let's say you're doing it and then you just decide to leave it for a while. Like some people say they want to take a break. You want to take a break. Has anybody done that before? You just decide to take a break for 1 month. Please let me know. Do I have anyone on this call who has done that before? You took a break for 1 month. Might be because things were not going the way you expect them to go. Or maybe you were busy, you had to attend to business or family and all that. Getting back after that period of 1 month, how did it feel? Tell me, how did it feel? Or how did you feel getting back? I know some of us on this call that left trading for a while. I don't know why we're not responding. But getting back into trading, how did it feel? How do you see yourself? Did it look like you've forgotten some things? Or were you trying to like even just, yeah, Madam Zainab, I know you took a break. Madam Zainab, when you got back, how did it feel like? Did you see anything strange? Was it like you were trying to learn this thing all again from the beginning? Or it was just a smooth process of getting back into it? Like you just it didn't really, maybe you didn't feel, I don't know. Like I was learning afresh. Fantastic. That's what I wanted to establish. So most times what people do in this month of December is you try out a style. Like I said, there's nothing wrong with any strategy you've been using before now. That you are taking losses for me doesn't mean that it's not working. No, it's the season. The ARC strategy is a strategy that puts you in a position to trade with the banks. Am I saying it the way it is or not? How many times have we executed the trade and then immediately we executed the trade, you just start seeing those long candles in our direction? And even if it's the opposite direction, even if it's the opposite direction, do you really notice that there are times you take a trade and then it's just in less than 2 hours, you've won the trade. And then I get feedback like, oh, coach, that was an amazing trade. Nice entry. It's because we trade with the banks. It's because we look out for positions where we expect the banks to put in influx of equity. But now the banks would not be as active as they used to be in this season. So do you still expect the strategy to work? Even if it works, it's going to take a longer period of time. So you see that there's nothing wrong with the strategy. It's just the season. If you use umbrella during the rainy season, yeah, makes so much sense. That's the best way. That's the best thing to do for that season. Then guess what? When it becomes cold and you're still using umbrella, people will look at you and ask you. So your ability to adapt in seasons, in respect to the things you do, the day-to-day activities, is what you should also bring into the forex market space. I'm not leaving the art strategy. As a matter of fact, I'm still going to look. That's what we're still going to work on for this week. But I'm just saying, I love to prepare myself ahead. I've been thinking about this since last month. I've been working on this since last month. I love to prepare myself ahead because now I have people that, if left to me, do you know what I'm going to do this month of December? Left to me this month of December, I'll probably just wouldn't even look at the market. I'll just continue to practice. And no, now I have people that I have to deliver signals. So I have people who are looking up to me. I have people who are counting on me. So it's not a time for me to say, you know what, December is that period where let's take It's a time for me to step up my game and then adapt in respect to the season. And that's why I'm talking about the strategy. So it's going to be an amazing one. You're not expected to risk more than 1% of your account. You're not expected to risk more than 1% of your account. And guess what? When you know this, even if you lose 1% today is Monday, let's say you lose 1% today, you lose 1% tomorrow, you lose 1% next tomorrow, you lose 1% Thursday, and you lose 1% on Friday. So let's say the whole week was a loss. That's how many percent, ladies and gentlemen? That's 5%. But do you know that 3 trades the following week, 3 trades the following week can cover your losses for those 5 days and even the losses for the next 2 days in the new week? Why? The risk to reward. 5% gone. You win 3 trades, that's 9%. 9% minus 5 is what? 4%. So even if you lose 2 trades the new week, 4% minus 2 is what? 2. You still end up with 2%. That's it. That's it. I see. You don't want to do yourself this time around by trying to be very smart. So I'm saying 1%. Don't think you want to go and be doing 2% because you need to buy stuff for Christmas. No, please don't do that. Like I told you earlier, I mentioned that it's not the money that matters when you lose a trade. It's the experience. It's the feelings. It's not really the money. Forget the money. The money does not even do anything. The money is not even, if it were to be about the money, then we'd still have so many people trading Forex today. It's not really about the money, it's the experience. You can't undo that experience. And even if you're going to undo it, it's going to take a period of time. It's going to take a period of time. This has nothing to do with the skill. I've seen people who are trading, they are amazing traders, but they missed it once. And you know what they did? You know the trap. They missed it once and then all that came to them, okay, well, you know what? It was a mistake. It wasn't a mistake. You're just being reckless. But this is it. Don't beat yourself too much over it. The mistake they made after that mistake was thinking that they can figure it out without putting themselves on personal development. No. So please, I'm begging or I'm pleading, even as we're going to be, even as I'm going to be revealing these things, I'm not even looking at sharing the strategy, and I'll tell you the reason. I don't want you to start tying it on your own. Let me be the one to take the burden of, if you lose, I was the one who gave the trade. If you win, I was the one who gave the trade. It's simply copy and paste. But I'm saying the first 3 days could be wins. The first 4 days could be wins. Don't think that because the first 4 days were wins, it gives you the audacity to increase your leverage. No, don't do that. Do we all understand? I'm saying this to prepare us. Does everybody understand what I'm saying? Right? Do we all understand what I'm saying? It's an amazing. See, this is it. Do you advise 1% per day for just one thing? That's what I'm saying, man. So this is it. Look at it here. Okay, it's on 5 minutes. 5 minutes. Good. Can you see the risk to reward? This was 6th of November. Did you see the risk to reward? Boom. One. See the second one. Risk to reward. This one did not hit 30 pips. This mark I have here is break even. So another thing we're going to do is, if price has gone 20 pips above, you break even 15 pips. If it doesn't move up from there and it comes back to hit your break even, fine. Or better still, if it has gone 20 pips, you break even 10 pips. So it's either it completes the remaining 10 pips to hit TP, or it comes back to hit your break even. Would your signals be with this strategy? Sorry if I'm doing you bad. Don't know about this. Madam Ezonabo, the act Madam Ezonabo is not act strategy. It's not act strategy. Madam Ezonabo has given you the name. She has given my strategy another name. It's not act. So yeah, correct yourself, man. It's not act to act scare. Please, can somebody correct her? Yes, thank you, man. It's ARC. Arcane Retest Confirmation Strategy. Thank you so much, Mr. Isubu. Arcane Retest Confirmation Strategy. So its foundations is based on the price trap, but the introduction of the confirmation candle and then going back, and then the top-down analysis is what made me define it. So it's the Arcane Retest Confirmation Strategy. And yes, back to your question. Would your signals be with this strategy going forward? So by next week, like I said, I want to look at what GPPNZD will do for this first week. Right? Now I've not so I'm yet to officially introduce it to corporate. I'm looking at having a session where I will introduce the strategy officially, right? Like, would invite everybody to come and see the strategy and all that, all those broadcasting, and that's when I'll introduce it to Pewat Nation. Until then, so for now, if I'm going to, I can't be giving signals both on ARC and on ARC. See, I'm saying ARC on ARC strategy and this particular new strategy. No, we're going to use ARC for this week, as we've been using all along on Euro USD. I'll see the way the market responds to trends this week, right? And then maybe by next week, get started with this one. But this one is particularly a sort of the way I'm going to be sending the signals of this particular strategy is that every morning or at the commencement of the London session, that's when we'll be executing the trade here. So you can see this is between 7 a.m. and 7:25. Did you see that? This is also here. 7 a.m., 7 a.m. and 7:45. So within 7 to 8 a.m., I would call out this signal. Right now, this was a break even. So if a trade has gone 20 pips, we break even 10 pips. So even if it comes down to take us out, we only broke even. This was a break even trade. Say the next one, this was a win. Risking 10 pips. Did you see how we just came down? It's 30 pips. And it's fast. It's very fast because it's the lowest time frame. Right? Look at this one. This one was break even. Price came down about 25 pips, came back to hit your break even at 10 pips. Right? And then this one is also a break even. Price came almost 28 pips before pulling back to the zone. Right? This was a lesson. Price was supposed to go up. It eats your, wait, what's this? Yeah, it eats, you see, it partially eats the stop loss and then still finally went back up. Can you see that? So this is 10 pips. It was a lesson. Right? Price did a break, did the retest, pulled down about 10 pips, and then turned backwards. Yes, pulled down about 12 pips and decided to go back. So it happens. At a point, I was considering, oh, if it goes back, I did something. If it goes back the other way, it could give us an opportunity to re-enter. But because we're risking 1% on one trade, I don't want to, if it's either it's a win or a loss, I don't want to create any environment for, oh, it was a loss. Let's wait for it at the other side. No, I don't want to do that. So when you take the trade, you know you've taken the trade, you're done for that day. That was a loss there. Yeah, we see a win. You can see price did a break, did a retest here and dropped. That's a win right there. This was a loss. Price did not even, it was supposed to go up. They came down. But when you lose, you're losing just 1%. When you win, you're winning 3%. I mean, that's amazing. Right? That's amazing because I was saying it the other day that do you know that, okay, even if you're doing 1-to-1, 1% for 1%, do you know that if you win 6 trades and you lose 4 trades, do you know you are still a winner? You know you're still profitable in the market. If you're doing 1-to-1, 1% on each trade, and you win 6 trades, you lose 4 trades. Who understands what I'm saying? You win 6, you lose 4. 6% minus 4% is what? You still have 2%. Right? You still made 2%. This was a lesson here. And I'm saying this so that you don't get bothered about the lesson. Because like I said, some of you are still having the difficulties of responding to losses. You still react to losses. You lose a trade and you feel like, oh, this thing is not working. Oh, what exactly is happening? This is the third trade. I've been seeing some of you reactions, even with the automated this thing. You take a loss and you're like, hey, coach, what's going on? This account it's not moving. What's happening? And I'm like, you're not the one who is trading it. If you're the one who is trading, do you know what some of you would have done? Maybe you'd have even smashed your laptops. So if you take a loss, Monday, Tuesday, Wednesday, Thursday, Friday, please don't beat yourself over it. You're just risking 1%. And understanding well that if you win 2 trades, it takes care of those losses. That's what makes the sense. Right? This was a loss. That's 2 losses in a row. Right? This was a win. This win has taken care of those 2 losses. And it has given you 1%. Right? That's giving you 1% already. This is a loss. This is a loss. Now you are minus 1%. This is a win. You're back up 2% win. Right? This is a loss. You have 1% win. This is a win. You have 4% win now. You are up 4%. This is one loss. You are down 3%. You have 3% win. You have 3% profit. 3 plus 3%, that's 6%. So what are we talking about here? You don't understand. 3 plus 3 is 6. So listen, this is another 3. That's 9. You have 9%. And guess what? See, let me also share something with you. At any point in time, we do 10%, we withdraw. So this is 9%. We just win one. We need one winning trade to clear. The moment we do 10%, everybody go and make withdrawals. I'm not going to be in that place of we've done 10%. Let's still continue, because the moment, so if it means that if the very first week we start, we had 4 straight wins. The very first week we started, if we have 4 straight wins, do you know what happens? We are done for the month of December. I've fulfilled all righteousness for the month of December. Yes, we are taking Mondays and Fridays. This has nothing to do with this strategy. Does not have anything to do with why don't we take trades on Monday and Friday? Who can remind me? With the ACT strategy, why don't we take trades on Monday and Friday? Can anyone remind me? Why? Why do we know? Why did we decide not to take trades on Monday and Friday? With the ACT strategy. If somebody can remind me. Larry, are you still here? Yes, you are still here. You are supposed to jump on that question. Why? Mr. David, you're supposed to jump on that. Wait, am I speaking to? Can everyone hear me? Mr. David, you're supposed to jump on responding to that question. No, not unpredictable, Madam Consular. I know you don't know. That's why you're asking if we'll also be trading on Mondays and Fridays. Mr. Isufu, you're supposed to answer that question. With the ACT strategy, why did we decide not to trade on Mondays and Fridays? Wait, remember you have a new, who is the, okay. We need to establish current zones, and market is very ziggy-zaggy. Okay, so why is market always ziggy-zaggy? The market is always slow. Good. Why is the market always slow? Because the banks most times are not really, they are not always active on Mondays. The major players in the market are not usually active on Mondays. Right? Go look at the chart. Tuesday, Wednesday, Thursday is when market makes its move. The biggest move the market makes is between Tuesday and Thursday. So the ACT strategy works with the bank, but this time we're not even looking to trade with the bank. So you see, it does not have any conflict with us deciding that we want to trade on Mondays to Fridays. So back to what I was saying, the moment we do 10%, it means that if, for instance, we kickstart this next week, and then the first 4 days, we're just winning. The moment we win, everybody would make withdrawals. When we make withdrawals, we'll come back into the market with the money, with the broker amount, with the broker account. Does that make sense? And I'm saying, I don't want to mention the name of the broker because I'm on YouTube. You know the broker we're using right now. The moment you do 10%, you can withdraw. So once you withdraw that money, we can now come back into the market with their equity. We're not going to make 10% and then say, let's still make on it. And nobody's making anything. You withdraw the 10%, give them their 3% of the 10%, you take the 7%, go buy yourself amazing things. The account goes back to the normal capital, then we trade again. Right, so I'm pretty excited. I said this session was not going to be a long one. My network had something to do with it. But I'm pretty excited about this. I've looked at several currency pairs. I've looked at several of them. I tried GBP CHF. Yeah, GBP CHF also did well. Yeah, at least that one was 6 wins, 10 losses. So 6 wins was 180 pips, 18%. The losses was 100 pips, which was just 10%. So when you subtract 18 from 10, you're left with 8%. Now that's actually great. 8% was amazing. I did GBP USD. Apparently, this doesn't look like it's going to work with GBP USD. I don't know. The USD card too was also amazing. That did 6%. So so far so good. I'm still going to look at other currency pairs before the end of today. I just thought to share this with you, to make you understand that at Pearl Nation, you're working towards making sure that you get the right rewards for your financial commitment into getting we're making sure we're thriving every single day to be sure that you get value for every amount of money you commit financially into getting into this space. That's the word. Right? How many of you love this? I'm excited. Imagine when you know that between 8 a.m. and between 7 a.m. and 8 a.m., Manuel will drop a signal. Now, you don't need to be checking your phone every now and then. Who likes the sound of that? Between 7 or 8, he's going to drop something. And if he drops something, I'm only risking 1%. And if I lose the 1% till the next day, it would establish activeness. You consider that instead of you thinking that you want to take a break on Forex for this period, no, you won't be looking at taking a break. Rather, you'll be looking at staying active. You take the trade, you can go do any other thing you want to do. So I want to appreciate every one of you for jumping on this session. Tomorrow I'll see you by 5:30 a.m., 5:30 p.m. rather. You take care and have an amazing evening and afternoon.